Hey everybody, welcome to the game plan. It's 9 a.m. and we have a lot to discuss. First off, silver. Yesterday I talked about that key trend line. Did you see the rip on that? Incredible. We'll look at that chart in just a little while. But before we get into that, I'm going to take you over to the charts and we're going to discuss. Obviously, the Federal Reserve came out yesterday and Jerome Powell was basically as dovish as he has ever been. He talked about 3 rate cuts next year. Now, what's amazing about this is that as soon as he said 3 rate cuts, the market said, no. We're going to price in 6 rate cuts. So a whole, basically 150 basis point in rate cuts next year. Now, remember that just prior, I was telling you in these game plans that it was already at 130 basis points in terms of rate cuts next year. So the markets are even going far and beyond what Jerome Powell is saying. They're just taking his cue of being able to talk about maybe cutting rates as something to really rip higher on. And oh man, did the markets rip. Unbelievable. We talked about that channel that we were in the S&P. Now, for the last really month, we blew right through that to the upside. Now, in the backdrop here, what we have is the chart of the 10-year yield. Now, remember, we had come down right around this support area and gotten a little bit of a bounce. Yesterday, huge flush in the 10-year yield. Today, it is continuing lower. Now, the important thing about today, folks, is we have to watch, do we close below this trend line low right here? If we do, and if we confirm tomorrow, you now open the door to seeing further downside. And I'm going to show you where your next target would be on this. And again, you got to actually zoom out a fair amount on this chart. But basically what we can do here is we can take a line going all the way back to kind of the low area here and drag that up, and that would be a potential level there. And what's kind of cool about this, and I'm going to show you guys this is some really cool stuff. Look at the channel that is developed here. Okay, so again, what we see here is we look at this area down in this corner, we start there, and this is when basically interest rates were near zero, right? We connected through all of this low area and this low area and even this low. And that line takes us up to about 2.96%, essentially 3%. You then look and extend that parallel, and it coordinates perfectly with this high and this high right there. So what I'm going to tell you guys is this, is that I don't think we're going straight down here. I think that's, by the way, if that happened, the economy would be in shambles and we're not seeing that. But I do think, again, a break of this area takes us out of a potential level that at least takes us down, maybe down to this area here around 3.5% would be that next stop. All right, so again, around 3.5%. Ultimately, though, 3% is on the table based on that bigger channel that we're seeing. Now, this morning, which is interesting, right? So we had a unbelievably dovish, at least dovish compared to what the markets were expecting Jerome Powell yesterday. Now, again, one of the interesting things today, we got jobless claims. Jobless claims came in 19,000 lower than expectations, or basically 19,000 lower than last week. That means less people filing for unemployment, meaning a stronger economy. We saw retail sales today. Retail sales were much stronger as well. So it's so interesting here how Jerome Powell yesterday comes out and says something like, oh, well, we're talking about rate cuts next year if inflation continues to come down. But the economy, that today at least, we're seeing it still strong economically. People are still spending, and we're still seeing not that much on the employment side breaking in this range. All right. So that was today's action there. I do want to flip on over here and talk a little bit about the U.S. dollar chart as well, because we have a big breakdown on the U.S. dollar. So, I mean, literally, and by the way, folks, I'm going to be fair and frank with you guys. Part of me thinks a couple things. You know, you can't help but say, is this attempt to lower rates and bring things back in check, even though CPI, Consumer Price Index, inflation is still between 3 and 3.5%. So we're well above what the Fed has talked about at 2%. But you have to wonder, is part of this election type stuff? Are they trying to just bring it back in to not crash the economy in 2024 going into the elections? Or is it something to do with the U.S. debt where they're starting to realize? Because one thing I've noticed, have you guys noticed how Janet Yellen's been out there talking up a storm? She's been everywhere talking about, oh, everything's good, and it's almost like there's two Fed presidents right now, two Fed chairs, I should say. And you have to say, if the U.S. debt is at $34 trillion and interest rates were to stay where they were, this country literally would be bankrupt much, much faster. And that's arguably saying, is it even already bankrupt? So these are the things that kind of go through my head when I see these kind of weird scenarios. Like what Jerome Powell said yesterday was out of left field, in my opinion, based on the data that we're seeing, based on inflation still being north of 3%. It's not even like we're in the 2.5 to 3 range. We're well above that 3% range, and so something's not computing here, and that's, again, something we have to figure out. I think it's something that eventually the markets will get skittish on, but right now, and I've said this in every game plan, the only thing the markets care about is the dollar falling and our yields falling. Basically, if that's the case, this market wants to go higher. All right, so the U.S. dollar, look at this, guys. Look at this previous pivot right here. We are now piercing that pivot right there. If we continue down on the U.S. dollar, where is your next technical support? To take a look at this, let's zoom out on the U.S. dollar chart as well, and just connecting the pivot points, we can find that next level. Let's take this pivot point and we go right to this low pivot here. All right, and what we have now is a new target price on the U.S. dollar for support where it should get a bounce. All right, so where is that going to be? If I zoom in on this, you're basically talking around 101.60, 101.70, right in that vicinity. So that is your next technical level on the U.S. dollar. Now, again, we've seen the dollar fall this morning. We've seen interest rates fall this morning. If we take a look at the spiders, the S&P 500, and we look at the intraday action pre-market, you should be able to guess that the markets are up, up, and away. And the answer is yes, they are. So we are continuing higher. Yesterday we closed right here, okay? We kind of floated around after hours, then began, this is last night, by the way, then the overnight hours closed. We opened this morning, we kind of went like this, and then that economic news, and this is what's amazing to me, right, is that we basically got stronger economic news, and the markets are loving it, because now the markets have the best of all worlds. They have basically Jerome Powell bowing down and saying, hey, we're going to have to lower interest rates, and you're also getting strong economic news. If Jerome Powell was hawkish yesterday, this strong economic news would have been negative for the market. Instead, it's now positive for the market. All right, so again, we're seeing this switch before our eyes, and it is remarkable. It is absolutely remarkable to behold. All right, so again, markets are moving higher. S&P spiders are at 473.45. If we flip back to the daily chart, there aren't many places left before the all-time highs. So you're basically coming into this area right here, but based on where we are pre-market, we're kind of above it already. And lastly, you have your all-time high on the S&P, and that will be your last level to go right up here around 480. And again, we're only about $6.50 away based on where we are pre-market. So it's not like we're that far away. That's a little over 1% from an all-time high. And by the way, the Dow hit an all-time high yesterday, but remember, the Dow is 30 stocks, so it's not really, it's not known as being a great barometer. I continue to think the Russell is probably the more true signal of the underlying economy, but either way, the Dow did hit a new all-time high. S&P has not yet. NASDAQ has not yet either, but NASDAQ is, again, unbelievably close. If we flip over to the NASDAQ chart here, you're basically coming into that double top here, right? We have that one right basically below 410, right in that range. And then if we get through, there'll be a trend line right up here around 412, 413 that would be your next level of resistance. And again, folks, I was one that I did not think that we would hit new all-time highs this year, let alone even in the coming years. So this is a surprise to me. Amazing the amount of kind of eagerness. Like if you look at the markets and you look at where we are, Interest rates, the last time we were this high, interest rates were at around 3.25% to 3.5%. So interest rates are higher, but the markets are able to get back to their all-time highs, which again is an impressive signal. Okay, so just a couple other things to watch today. I do want us watching the bear flag that continues to be on Microsoft. Microsoft, even with yesterday's big rally, it was actually flat to negative. So again, please note this pattern right here. Maybe it gets negated or not, but again, that is something, being almost a $3 trillion company, that I am keeping a close eye on in the charts. All right, obviously same thing with NVIDIA. NVIDIA, it's kind of at the higher end. Let's watch to see how that performs today as well. And one other thing to mention here is Adobe. Adobe had earnings yesterday after the bell, and it actually is down on earnings. If we flip over to the intraday, it's come back, but again, you can see big drop, and then it's floated up because the markets are floating up. But nice drop here. I would just recall that earlier this week, Oracle reported earnings and was down over 10% on earnings as well. These are mega companies, but again, in usual markets, when a company the size of Oracle or even Adobe comes out, it would affect the markets. People would say, oh man, that's not good. In this market, there's no cares. There is no cares. It's rates going down, dollar going down, buy the market. That's all there is. That is all there is at this point in time. So even with Adobe down, even with Oracle, right, it's not having an impact on people's psyches. This is an emotion-driven rally on the back of this hopium of the Fed just going back to these low interest rates and flooding the market with money. Think about it like this. We always say, let's party like it's 1999, right? Essentially, the markets want to party like it's 2021. Okay. Next up, let's take a look here. In fact, I'm going to step over to the center screen. Before I get into silver, before I get into gold, before I get into Bitcoin, we're going to get right a quick little ad from iTrust, my sponsor. Thank you very much.
Do you have an existing IRA or retirement account? iTrust allows you to buy and sell crypto, gold, and silver all right within your IRA. And the best part is, they make it simple. All you have to do is transfer your preferable amount of USD through iTrust, and then invest that into crypto or precious metals on the platform. To get access, use the link below to find out more about investing through iTrust Capital.
All right, we are back, guys. So here's that silver, and look at silver's run. Incredible move here. If we take a look at this, right, remember yesterday where silver was kind of dancing around this trend line right here, major pivot low from right to there, and ultimately look at the run and then look at the continuation today. So congratulations if you were someone who saw this. I saw a couple comments that some of you guys picked up silver yesterday and obviously have benefited greatly. And again, that is a beautiful move on silver. How high can it go? Well, you obviously have the resistance point, right? So we know that this high pivot is now your resistance. In terms of going straight up there, it's really going to be determined by what the US dollar does. If the US dollar keeps falling, it's going to go right back to those highs and make new highs. If it doesn't, then you look for some stalling out. Like, what's a 50% retrace of that move? I mean, let's just take a look here. We can do this real quick here on a fib retrace tool. And if we just do that now, and we say, okay, well, how much of a retrace is? Well, so we're basically borderline, and let me zoom in on this so you guys can all see this. All right, we're basically borderline 50% now, right? So just a little bit higher. This trend line right up here is a 50% retrace. So at some of these fib levels, if the dollar does not continue to drop, that's where you're going to start to expect some resistance. If it gets through this one, your 618 would be right up here as well. Do I think silver's going to break out and continue up and hit 30 next year? Yeah, I think there's a good chance that we hit 30 on silver next year. I know it's been kind of the level that everyone's dreamed about, and I do think eventually it does happen. So something to watch anyways and keep an eye on. Now, if we take a look at gold, same thing. Again, we look at gold here, and I'm going to zoom in on this here on the gold chart. We can very clearly see that gold right here was into some support. That crazy candle, topping tail, whatever you want to call it, fell right back into support. We had lots of converging support right here. And again, we've gotten a bounce off that. The first step for gold, guys, this is the first step for gold, is to close above this level. Basically $20.80. Now you might say, well, what about this? Well, that's secondary, right? That's a secondary level up there. But so far we have not had a daily close above this line that goes back multiple years, 3-4 years to the 2020 highs, right? We have not had a close above 2080. That's step number one. Then after that, once you achieve that goal, then you start analyzing and seeing if you can break above the high, which was around 2150 or so. Again, I've calculated out my inverse head and shoulders target should be around 2,500 and change in 2024. I do believe it'll happen in 2024, but needless to say, longer term projections, they're never as accurate as shorter term projections. You know, just like this. This was a projection right here, right? Very easy, right? I mean, it's not easy, but the point is you see the results right away and it's right into support versus when you're going out long, you're dealing with a lot of unknowns. You don't know what central banks are going to do. You don't know what this is going to happen. You know, what's this and that and everything like that. Okay. A couple other things I want to just quickly go over here. Bitcoin, obviously. Now, Bitcoin had an interesting little intraday dump just a little while ago. It has recovered, but I do think that we have to be aware that Bitcoin continues to be something that is very, very volatile on an intraday basis. There have been periods where Bitcoin calms down, but again, we've been seeing more and more of this kind of whippy volatility where Bitcoin was trading at 43,300 and it dumped to 41,500 about. I mean, that's a very big dump in about 30 minutes of time on the 10-minute chart. Now, if we flip over to the daily, however, the daily doesn't look quite as crazy, right? If we look at the daily here, it's been up. It kind of had this, and I love some of the comments I saw you guys really appreciating the analysis on what a bear flag is or an immature bear flag, stuff like that. But again, this was a bullish pattern which failed. Then you started to get sideways consolidation, but you never got a mature. I mean, it was really just one candle yesterday and then the beginnings, and then we popped up. So when you look at this chart, to me, this is kind of like what you'd equate to a 50-50 at this point. And when I mean 50-50 is that essentially what you're getting now is you're getting sort of a wedge pattern. And the question is, well, which way does it break? Does it break this way and go here? Or does it break this way and tackle the highs and then eventually go to that 48 to 50,000 level we've talked about on the charts? So again, now that we don't have any firm pattern formations, you just have to sit back and kind of say, okay, well, which way does it ultimately break? Okay, couple other charts. Two more charts I want to show you guys real quick here. Uranium. I know a lot of you guys are into the uranium stuff here, which is fair. I actually like uranium longer term. You are getting close to a double top up here, so just be aware. You still have a little bit more upside, which I do think it will see, but eventually you'll have to contend with this double top. If we look at a bigger time frame on the URA, and I don't know how far this actually goes back, not very far, right? So again, you can see that at least if historically this is still relatively low. What I would like to see if I had to choose here, right? So if we look at this and we look at this pattern formation, what I'd like to see is kind of a consolidation of, bear with me here. There we go. That's the chart I wanted to show you guys. So this is your zoomed out chart on uranium or URA. What I'd like to see is essentially you're kind of made a big cup here and a handle. So I'd like to see this continue, maybe a little consolidation, and then I actually think it can break out to the upside, like a big cup with a handle with a little cup handle, and then you can break to the upside there. Lastly, I do want to talk about the VIX. I think I meant to yesterday, folks, but understand that when I'm doing these live. So sometimes I have time, sometimes I don't have time to cover things. I do my best to cover as many things as I can. But if we look at the VIX, guys, the VIX, again, shows the amount of fear in the market. The lower it goes, the less fear you have. Right now, the VIX is at 1196. Historically now, you have to go all the way back to 2020 to find a level that low, right? So again, basically before COVID. And so what this means to me, when you see a VIX at these levels, it doesn't necessarily say, okay, at this second, you're going to have something. But basically, it tells you that there's a lot of complacency, that there's a lot of people on one side of a market that they believe that everything is fine. And that's usually when, like, think about it logically. When we feel like we're on top of the world, that's usually when we get smoked down, we get hit down. The markets react the same way. And so what you can see here is the lower we go, if you go back to these levels, when you're back in these levels, which is around, like, let's say, 10, 11, 12, even down to about 9, inevitably you get a pop. And all these pops, right? All these pops along here, and I could just keep going like this all the way along, That's where fear comes in because there was no fear. And so I don't know what will trigger that. Maybe nothing for a while. But at some point, if you look at the VIX, like let's say you were someone that just always bought the VIX when it went below 12, inevitably you'd make money in the long term over the course of months. As it always pops up, it just takes a while for it to do so. So again, the VIX down here tells me one thing, and one thing is that there's a lot of complacency, that there's not a lot of fear, that everyone's now thinking, okay, perfect landing, Fed going to drop interest rates, free money again. All of these things are now in the purview of the market. The question is that really reality? And at what point is there some sort of pseudo rug pull for reality or a different reality or narrative to set back in? All right, guys, back to center screen here. I do want to say, as always, you guys rock. I love the comments. You guys seriously are so kind, and I do appreciate it, especially, markets are tough. I'm going to be fair with you guys. I didn't see this move up coming to this extent. I was long a few months ago. We took most of our profits on our longs. I've been accumulating shorts. And again, it is tough. There's no doubt about it. But ultimately, watch the markets, use the levels. That's what all I can do. That's what served me well for 24 years of trading. You guys have a great, great rest of your day. I will see you tomorrow. Take care.